Going on, gang? Hello, hello. You guys wanted to see, there was a request this morning in the live trading room to do the go live during the FOMC statement. So that's what we're doing here. Extremely tired today so far. I've been running all over the place. But we're here. So welcome, guys. We've got the FOMC statement coming in about 10 minutes. So we're going to hang out a little bit. And then if 2 o'clock comes and my body explodes, you know that my position went the wrong way. But do me a favor while you're here, just share this on Twitter, share this on Periscope. If you're new watching, make sure you subscribe here on Periscope, over on YouTube as well. I've got 2 YouTube channels. I've got the Akil Stokes YouTube channel. Just search Akil Stokes. This is where I'll put these personal blogs. I do put all of my trade empowered videos up there as well, along with some more entrepreneur videos. I'm going to, hopefully, it's on the to-do list to start getting a few videos out there, not trading specific, but just talking about, hey, entrepreneur, being an entrepreneur, starting your business, stuff like that. But if you're like the trading videos, go to Trade Empowered FX. You can check out that. So YouTube search Trade Empowered FX and you can see it as well. We have to hold off that run. You know what? I got my run in earlier. We've been doing. We started yesterday. We're running for cause the entire month of November. We're doing a running challenge where we are raising money to support a very good cause, the Chestnut Treehouse Hospice. So we've been running every single day, trying to run as many miles as we can, raise as much awareness as we can, raise as much money as we can, and help support these children and families of need, in need. I'm only in a pound dollar position right now. It's the only one I have left. I got a pound dollar short on, up about 24 pips right now. Looking for a move back down to 122.50. So we can see if we can. I would love for that to happen in the next 10 minutes. I don't think it will, unfortunately, because we have this big spooky Fed announcement out. And I'll tell you what. It's really nothing. We went over this in the live room this morning. Obviously, when I mean nothing, it doesn't mean that the markets are going to stay still. I do expect volatility because the markets move off of 2 things, right? And yeah, it's great to hear you back, Chip. I sent Charles. Charles showed me the message, and my family gave out our thoughts and prayers for you, man. So it's good. Hit profits on Aussie Canada early this morning, so really small. So it's basically a break-even trade. But it's a bunch of nothing, guys. Here's what's happening. We have, here's the whole Fed thing, if you guys are new, right? The big thing we've been asking ourselves really for the last 2 years is, are we going to hike interest rates, right? Because that's what they've been telling us. They've been feeding us. Interest rate hike, interest rate hike. I was talking to a trader this morning who was asking me, Akil, what do I do? Is the Fed going to hike today? I'm like, no, they're not going to hike today. If anything, they're going to hike in December. But it made me laugh. If you remember, last year they told us what? We're going to hike 4 times in 2016. Right? You guys remember that? Not only did it lead up like 2 years before that, but last year they told us, end of last year, we will hike 4 times in 2016. How many times did we hike? Anybody know? We had 1 rate hike, and actually it was what? I don't think it was even 2016. Was that December, I think it was? We had 1 rate hike when they promised us 4. And we've been playing the whole game. Well, we're gonna see how the data's going, right? One rate hike. We're gonna see how the data's going. So, you take with a grain of salt what they tell us. They tell us what they want us to hear. They tell us what they think we need to hear so that we feel good, gets the morale up, and then they go ahead and change it later. So there's not going to be any hike today. I can tell you that. If anything, there's going to be a hike in December. I doubt they're going to tell us anything about a hike in December because guess what? We got elections next week. I don't think they're going to, today would be the day where they make a statement where they say, we're definitely going to hike in December. We're definitely not going to hike in December. And the market's going to, or they say a bunch of nothing, which is typically what happens. And the market's kind of interpret and saying, oh, did you see that? That means they're leaning towards hike. Ooh, that means they're not going to hike. And people interpret it whatever way they want, but I doubt they're going to come out and say anything definitive. I don't know, obviously. This is just my thoughts, but I don't think a week before an election they're going to come out and say anything definitive like we're going to hike or we're not going to hike. If anything, they're going to have a vanilla statement where it's nothing, straight vanilla, plain, right? And then they'll come and amend it later, meaning that sometime before December they'll come back and say, well, we added this to the statement or we added that after this whole political process is done. So, but with that being said, I don't know if the markets are going to move or not. That's the thing about fundamental analysis. Good news doesn't always equal good movement. Bad news doesn't always equal bad movement. Something we've been doing in the live room lately is we've been talking a lot about news events. We don't trade them, but we do like to. A few of our traders are getting to the point now where they want to be more well-rounded. They want to be educated on them, and we've been doing stuff where we talk to a lot of traders where it's like, hey, look at the news event, look at the forecast, look at the actual number, and then compare the reaction. And that's how typically news works. It's fear and greed. If the market hears something that it likes, that it already agrees with, you'll see a big reaction. If the market sees something that it dislikes, you'll see a little bit of reaction, an impulsive reaction initially, and then it'll go back to right where it started because that's what the market feels, right? Have you guys ever seen that with a news event where you see a spike down and you're like, oh, panic, 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 and then you look at the charts the next day and it's right back where it started? Give me some hearts if you've ever seen that. You get like a big 50 pip move, 100 pip move, and you come back later in the day and it's right there. It's an initial reaction, initial panic, and then everything always works its way out and ends up doing exactly what it thought it was doing. So that's why I stick to the charts, even though that stuff like that can hurt you as a day trader. That's why we stick to the charts. Tony says I also have a pound dollar. Yep, we're in the same trade, pound dollar bear Gartley formation up at 123.22. So it's hovering around 20 pips of profit. So we'll see what happens. We'll see what happens in 3 minutes. Dun, dun, dun. Dun, dun, dun. 3 minutes, right? We'll see. So I actually before doing this, I had a really good Periscope plan for you guys. It was I was going to talk about 20 reasons traders fail. It was a nice little blog post I came across. I'm going to have to save that. Maybe tomorrow, maybe I'll do it in the Forex market preview this Sunday, but it's a pretty good topic. It's a list of 20 reasons. This guy, Steve Burns, many of you know him, does a lot of stuff with newer traders, has a lot of books, a lot of really intro level blog posts on like trading psychology, stuff like that. And I was going to go through that list and just give you my interpretation of it, maybe some personal stories as well. But I guess I'll save that. I'll save that for maybe tomorrow. What do you think of Scott Carney's FormationSecret.com? I've never used it, so I don't know. No opinion. I've never used it. I'm not really big on using mechanical systems. We have a few in-house things. We have Constellation software I'll use for pattern recognition. We have our DSR levels to help with visual recognition of support and resistance. I'll use those, but I'm not really into a lot of indicators, so I just don't. I never used it, so I don't know. Yeah, no problem. No problem. All right, we got about 2 minutes left. 2 minutes left. How can I get a Trade Empowered t-shirt? You got to fight me for it. Winner take all. Winner take all. Now, we got these a few years ago when we used to do these live events. We don't do them anymore. We used to do these live events. What do you think about the euro dollar? It's been a really bland pair this year, really over the last 2 years. It's been really boring. It's been basically in consolidation since 2014. So it's typically a very active pair. It's the most popular pair, so you can get some good movement out of it. This year it's been, it's given us a few advanced pattern formations because of the consolidation, but there hasn't been a lot of opportunity on euro dollar. It's just been going sideways. And that's how a lot of pairs have been. It's been a very slow year. No, I'm still in pound dollar. I'm gonna trade this out. I'm not fearing this FOMC statement. But we'll see. We'll see in a minute. You guys will be the first to know if I get stopped out. If I start yelling and screaming and throwing my phone, that means I lost. If I start getting up and partying, that means I won. But no, I'm sticking it. So we'll see. Oh, here it goes. Hold on one second, guys. This is one of the things, if you have a position on, you want to make sure you manage it with an at market order. Told you, least interesting, least surprising.
And no explicit signal that any rate increase is imminent. The statement does note that inflation has moved up.
Let you guys listen for a little.
Has increased somewhat since earlier this year, and market-based measures of inflation compensation have moved up. Other than that, no real change.
Nothing,
We are looking for a hint as to future Fed actions. The Fed adds 2 words to its formulation from
They
September.
added 2 words.
The committee judges that the case for an increase in the federal funds rate has continued to strengthen. And it goes on to note that members again decided for the time being to wait for some further evidence of continued progress towards its objectives. There were 2 dissents in this statement, Kansas City's George and Cleveland's
I told you, right? A bunch of nothing.
President Eric Rosengren, who dissented at the September meeting,
All right, we can turn this
voted
off.
with the majority this time. So, 6 days before the presidential election, and there was no mention of politics.
There you go. Again, right before the presidential election, and like we predicted. Again, I'm not a genius for this, guys. Just, I have a little bit of experience in the market. I do a lot of reading to educate myself. It's just, they don't want to mess anything up before the presidential election. No one's going to tip their hand. So basically, if you didn't hear it, nothing changed. They added 2 words. They said the same old, we're continuing to monitor, and I'm sure it'll come back before December, and we'll get some type of idea of what's going on. But as we expected, a bunch of nothing. There's 0 reaction from the markets. You can see my pound dollar trade, which is up. Pound dollar trade, which is up. Well, I'm going to mess things up here. It's up from our syndicate. We're up about 22 pips. It's done exactly nothing. Exactly nothing. Exactly nothing. Try using investing.com. Investing.com for what? Look at that FOMC statement. No reaction. All right. Guys, have any other questions while we're here? We're not going to do. I'm going to hold that 20 reasons why traders fail or traders struggle. I'll probably hold that it till Sunday, unless I do one before that. But let me know if you have any questions, guys. We've hung out. We have been here during the FOMC statement and survived. We hid. We covered our heads. We packed our care packages, and absolutely nothing happened. So now we just resume ordinary people life. Have you ever tried programming your trading method in algo? Not my trading method personally. I don't like mechanical systems. I've traded mechanical systems before. We've automated some of our systems before, but the way I trade, I don't personally like automating what I trade. It's really dynamic. It's really discretionary. It's really based on really a full breakdown of the market. But you can certainly, if you have a proper rules-based system, you can basically systematize any type of trading strategy. It doesn't fit my personality to have something automated. What was my max drawdown this year? 20% maybe? 20% early midsummer. I think end of June, early July was a real rough patch. Maybe 20%. See if I have my stuff in front of me. That would be my guess. Somewhere in that area. 2015. Where you at? What is this? 26.2. Oh, 15%. 15% from about a 26.6 return to an 11.5. This had to be week 17. From week 17 to about week 28. So a 10 stretch period from that equity high to equity low. Week 17 would have been, I think that's July. I know it was sometime during the summer. June, July, somewhere around there. But yeah, about 15. So better than I thought. Greed is good. Until you lose it all. I was talking to a trader today on Skype. I've got a lot of these traders lately that are They're contacting me and they're saying, hey, Keel, my goal is to make 10 to 20% a month. 10 to 20% a month. And I keep telling them, and I'm like, 10 to 20% a month, that's a lot. Like, do the math on that. If you're averaging 10 to 20% a month, you're 100, 200% a year, right? That's insane. You got to understand that there's a difference between, and I get hammered every time I say this, there's a big difference between what the internet will tell you and what the reality of trading will tell you. Internet will tell you and make it seem like it's normal to make these 20% returns a month, right? On average. Sure, you can make 20% a month. I've had 20% months before. But when you average 20% a month, that means you're bringing in 20% a month every month, right? Does that seem realistic to you guys? For you guys that have experience at least, 20% on average a month, every month? I mean, just think about it. Do the math, right? Write down your account size, write down your position size, and then base your equity curve off of 20% a month, and see how successful you will be. It's incredible, right? In reality, right, you're considered a good trader. This is kind of industry standard, right? If you're considered a good trader if you can do what? If you can return what? What is that limit? That, I guess, that floor of, if you can make this on average a month, you're a good trader. Does anybody remember? This is good. Green apple. Gabrielle says 20% a year would be awesome in stocks. Yeah, if you can make, this is kind of what's considered. You can make 2% a month on average. You're considered a good trader. If you can make 5% a month on average, you're considered like the top trader. And again, you can throw money management into that later, but essentially you're looking at about like a 25 to 60% return, which a 60% return is incredible. And I don't think anyone would complain about a 20% return. But the thing is, and I talk to these traders all the time, and it's hard because you don't want to tell them it's impossible. Like, I'm sure you could, but you don't want to shut down their dreams. You don't, hey, Keel, can I make 20% a month? No, you can't do it. Stop. Because you just make people feel bad that way. But you got to understand, yes, it's possible to make 20% a month, right? It's possible to make 20% a month. But if you can make 20% a month, it means you're probably trading a much bigger position size than what you need to be trading, right? Would I be correct in saying that? You probably have to, you got to be really, really risky, really high on your position size in order to make 20% a month. Right? So if you're trading a position size that is too big, a dangerous position size, what's the downside to that? If you can make 20%, you can also type it in. Yeah, you can also lose 20%. And that's what happens to a lot of these traders. The guy I spoke to today was like, Akil, I started off well. I did between 10% and 20% for the first few months, and then I blew it all. And that's what happens. When you're risking that much to make 20%, because guess what, guys? I can make 20% a month if I wanted to. Let me just up my position size and get on a hot streak. Right? I'll give you 50% in a month. Right? If you take one of my hot months of trading, and if I know that hot month's coming, right? And I ratchet up my position size, if I ramp it up, right? I'll make 50% a month easily. But guess what's going to happen on the down months? I just showed you guys the drawdown, right? This was the equity curve I was looking at. I just showed you guys the drawdown, right? What's going to happen between here and there? If I'm trading a massive position size, what do you think? Is it going to be a 15% drawdown? No, it's going to tank. It's going to tank, and I'm going to blow up my account, and I'm going to be out of business. Right? I'll be out of business. No chips, no chair, can't trade, can't make money, done. Conservation of capital is the key. Conservation of capital. The key to trading, right? It's a long-term sport, right? This is a marathon. Don't go broke. As long as you're in the race, right? As long as you're in the race, you have a chance to do some very, very great things. If you're broke, you're out the race. You're out the game. If you're out the game, you can't do anything. You're done. You got to sit on the sideline until you can grow another account and then probably blow that too. So last week, one guy told me he made 700% in a day. Is he selling that system for $19.99? Is he selling that system for $19.99? If you buy now, does it come with a unicorn and a leprechaun? Huh? I bet it does. Buy today, and I'll throw in this unicorn and a leprechaun too. Yeah. If oh my gosh, just whenever you hear stuff like that, think about it like this, right? If I had a system that was producing 700 pips a day or 700% a day, first of all, right, would I be on the internet bragging to you about it? Probably not. I wouldn't want anyone to know, right? Would I be trying to sell you anything? No, because guess what? If I sold you this system, it would probably sabotage it for me. If I'm making 700% a day, I don't want anyone else knowing about it. Nobody else. And if I were to sell it, it would cost you your life. You would owe me your life, right? I don't even think there would be a price, right? Because why would I sell it for a price if I'm making 700% a day? All of my efforts would be put in making my 700% a day. So be careful when you see stuff like that. If it seems too good to be true, it usually is, right? So you see a little 1999 system that's supposed to make you a millionaire in 5 years. There's a reason it's 1999, right? Because if it wasn't, it would probably be sold for a lot more. Same thing with if you look at the industry standards for these training courses. I was talking to a guy shot me a message on YouTube about, said, hey, I was looking for, I only have about $300 to spend on education. Do you know any full training courses I can get for that much? And I said, no, I don't. When I look around, I know what our training courses cost. When I look around at other training courses, right, you're looking at anywhere between, I would say, a minimum of $5,000 to $20,000. At least the legit ones. The legit training courses, the ones that I've heard from that people say, hey, this is not a scam. People are actually working with you. They teach you some quality stuff about technical analysis. They're between $5,000, right? $5,000 and $20,000 if you want the full thing. And from my experience, that's what I've noticed in the industry. That's the industry standard for quality education. So. Someone asked how long I've been trading. I've been trading since 2007. I started in the stock market. Trading stocks. Apple was one of the first stocks I bought. Pretty good call. Then I sold it way too early. But I had no idea what I was doing back then. Or very little idea what I was doing. Come on, baby. You want to get down there. We're right at that previous candlestick highs where 122 is holding us up. 122.80s. So. All right, anything else, guys? If not, we're going to get this onto YouTube. Do I still trade stocks? No. I always say, I want to get back into it. I just don't have the time. That's the thing that hurts me. I always say I want to get back into the stock market. I may do options. I may get into options. I just got to learn it. Options are tough. That's a different ball game. But I would like to, if I have time, at some point, I'd like to learn about options. I just don't have the time to dedicate myself to the stock market. I rarely have enough time to dedicate enough time to making myself a better trader. We talk about this all the time. I talk to Greystone a lot about this. Once you become a coach or a mentor or a teacher, your priorities shift to the clients that you're working with and not yourself. Now, that's part of the game. We understand that. If you're going to be a good coach or a good mentor, that's how it should be. But there are some times, especially during the year, where it's like, man, I really wish I can back test this. I just don't have the time to put in those hours. So it's tough. But typically December is when I get some time. We take a few weeks off for trading or for coaching in December. So hopefully I'll get a few weeks to, if I don't go on vacation, which we're overdue, hopefully I'll get a few weeks to focus on my trading. Does advanced patterns work on stocks? I don't know. I know they form. I don't know if they are consistently profitable on which stocks. I've never tested it, so I can't tell you. I know they form on stocks. We looked at them on stocks and options and different indexes, but I can't tell you if they have the same type of expectancy as they do in the Forex market. Because you guys know, even in the Forex market, some pairs do really, really good with them. Some pairs don't. I will be coming to London. Yep. And when I'm gonna check your restaurant out. Not for this vacation, no. Not for this vacation. I just missed a really good question that came through. Sorry about that. If you can ask it again, and then we'll start getting out of here. It just came through a couple seconds ago and I missed it. I'm sorry. These Periscope things, they disappear so quick. And there's so many of you asking questions. But I will get out to London. The plan is for next year, maybe next summer. Are you in real estate? Yes. Yeah. I'm a real estate investor as well. Real estate. I actually got involved in real estate before. Well, no, I guess technically not before. I was in stocks first. But I've been in real estate for a while now. And then recently really turned it into, I partnered up with a few other people and turned it into, took it much more seriously as a business, I would say probably in the last 2 years. But I got involved in real estate and the stock market about the same time. And then as real estate got more frustrating, I said, hey, I need to partner with people because I don't want to do the work myself. So as a group, we all have our different roles, which works pretty good. One of my best buddies, John Bomberger, you can follow him. He posts a lot of really good articles. You can follow him on Twitter. It's Bomberger John, BOMBERGERJON. Post some very good articles for you guys that are interested in real estate. And this guy's got an awesome story, man. He quit his job, right? Flat up just quit his job one day and said, I've had enough of this. I've had enough of working for the man. I'm doing something for myself. And he's got like 5 kids. So it's like, it's hard to take that type of leap. He's like, I don't know. I don't know how I'm going to provide. I don't know how we're going to get through this, but I'm going to find a way. It's one of the most inspirational stories I've ever heard. I can never feel bad about myself. When I took the leap, I was single. I was living in an apartment with I owned the property, but I was living in a property that was rented out to 3 other of my friends. So, it was difficult, but I didn't really have any responsibilities. This guy's got a wife and 5 kids. You got to put money on the table. And the real estate real estate just sucks. It's just agony. It's very frustrating. It's not enjoyable. The day-to-day on real estate is not enjoyable. So no way. I don't enjoy doing real estate as much as Forex. Now, in my opinion, real estate is a much better long-term investment because guess what? Land, you're never going to have a problem if you own land. Never going to have a problem if you own land. It's yours. It's there. Forex, you still never know what happens. You could have slow markets. You can have brokers go crazy and steal money. It's not as safe as real estate. So it's a good combination because real estate's it's a long-term investment. It also brings in passive income while being a long-term investment, while Forex brings in the day-to-day stuff. And then you can also, growing your account long-term with Forex as well. So it's a good combination. It's a good way to diversify. And diversification is still key. But the day-to-day stuff on real estate is horrible. That's why you hopefully hire people to do it for you. Our property manager, my best friend. The stuff, because I've been a property manager, it's horrible. Tenants stink, right? Getting people estimates to do stuff, it stinks, right? So have someone else do it for you if you can. Is it worth having an ECM broker? Sure. I think that's a good type of broker to have. Back to position size. Do you use the same delta in your private account as in the syndicate? No. I don't. I don't even know what our syndicate delta. We don't do any money management in syndicates. I don't even know what's our syndicate delta. I don't know if we have a delta in the syndicate. We don't do any money management. We keep everything the same. So it's going to be a no. But I don't think we have them. We don't do any money management in our syndicate. We just trade. We trade a standard two mini lot position size, 1 in 1 out technique. We don't change anything. We don't up position size. We try to keep it as simple as possible because we know that new traders are joining the syndicate each and every day. People are signing up for that $1 trial every day. So every day there are new people in there. That's probably just what was up there for the money management spreadsheet. That doesn't change or anything though. We can use it to show what if we did use money management, what the returns would be, but we actually don't change it in there. But $5,000, that's a conservative one based off a $10,000 account. pretty conservative. Yeah, I'm pretty conservative in my personal money management as well. I don't like to change position sizes too often, mainly because in the past I've been through a lot where I've changed position sizes right when the drawdown comes, and then I lose twice as much, and it's like killing me. And as we talked about this morning, if you lose, right, you got to work twice as hard to gain it back if you're bouncing between position sizes and stuff. All right, I think that's a wrap for today, guys. Still got time to check out the second half of the Jason Stapleton program. Thank you for joining me. Sorry there was no chart action. Nothing went crazy, but that's kind of what we predicted. So again, if you're watching this on YouTube, hit that like button. If you're watching this on Periscope, do me a favor, share this video. Tell people to head over to our YouTube pages and fixed ratio is fine. Yeah, fixed or smooth ratio is fine for money management. But check out all the videos on our YouTube pages. Of course, check out our website. For you guys that are interested in the syndicate, I saw a bunch of you guys type it in. It's $1 for 30 days. So invest $1 in yourself, sign up for 30 days, see if it's something that you like. If it is something that you like, you can join. And then, if you're serious about becoming a better trader and you like our style, maybe we are the ones to help you achieve those goals. So see you guys next time. Take care.